Hey guys, we are covering Hut8 in this video. I'll quickly go over the company's investor presentation just to see what they've been up to, and then we'll go over their financials and then revenue and share price projections. Hut8's investor presentation. This came out in April, and so we are only going to focus on the important slides. So current asset base and mining power, the company is running at a hash rate of 1073, which for a while was actually very high. In fact, they were the first company to reach this target, but many miners now have caught up and exceeded this rate. And so they have two facilities, both in Alberta, in these two places. We see here that the Medicine Hat facility has an agreement signed for gas and wind energy to be used. Now this does two things. This is always an important metric that institutional investors look at when they invest into these mining companies, especially with the recent topic of Bitcoin energy usage that's being brought up. And number two, low cost energy means better profits to be made for the company. Next, we have their growth strategy presented, and we'll cover them in order. So number one, they joined a mining pool, and what this is essentially, it combines their hashing powers with others in the network, solving the same equation and splitting the reward that is the coin in the way of how much your rig actually did. And so this treasury management is essentially them staking their coins so they can be used to generate revenue. These NVIDIA miners allow them to mine Ethereum and other coins in that network and provide them with the flexibility to be paid out in Bitcoin. So very interesting and definitely something I think is useful, especially since we saw the Ethereum rally. They will be able to capitalize on coin fluctuations in the future. 3, 4, and 5. New equipment for faster speeds and flexibility. Pretty good to be expanding as their competitors also add to their hardware, and I think Hut8 has definitely been one of the slower miners to expand, but they're doing so efficiently and not taking as much risk. This correction lately I think is definitely a cautionary sign that going too fast in this space can leave you out and dry when things go bad. Last, a 4% yield on 1,000 Bitcoin is giving them a little boost in their revenue generation. It's not anything crazy, but it's good to be utilizing these different avenues of capital generation. Okay, so here we'll pay attention to two numbers, forward multiples of enterprise value to revenue. Hut8 trades at 3.21 times, and you can see that recently they've gotten quite a bit cheaper. Now on an enterprise value to EBITDA, the company trades at 5.59 times. And when we compare them to some of their competitors like Bitfarms and Riot Blockchain, Bitfarms trades at 19.2 times revenue and 149 times on EBITDA. Riot, on the other hand, trades at 11.3 times revenue and 17.2 times on EBITDA. So Hut is trading at a much lower valuation compared to many of their competitors, and the main reason for this is due to their lack of growth and expansion. While the company feels strongly on maintaining stable capital allocation and not chasing cycles, investors feel differently and think that they are losing out by not capitalizing on this current cycle. Over at the income statement, we see Hut's Q1 earnings nearly $32 million in revenue. This is a 151% increase from the previous quarter, and of course, fueled by the large Bitcoin rally, it's not surprising. And some things to note here are the gross margins that now exceed the 50% mark at 54.4%, which is very healthy, along with the increase in operating expenses that grew at 184%, almost tripling. Both these items fall in tandem with the increase in revenue and will be telling of the company's profitability in the future. Next up, we have the balance sheet, and just looking at this is kind of crazy, and I say this because the company's assets more than quadrupled in just 6 months. On the liability side, they've even managed to lower that as well, which is very surprising. And while this looks awesome on the balance sheet, they're healthy, they got all this money and low debt, and they haven't really diluted much either, really. I'm wondering, why aren't you doing more? Your competitors like Bitfarms, Mara, and Riot Blockchain have all spent a ton of money to capitalize on the future of crypto. You believe in crypto? I just feel like I'm not seeing enough investment here. And that is most likely why we've seen the share price of the stock fall harder than the others. I mean, I remain bullish on Hut, that they have this money to work with. They're very prudent in their decision making, so I'm going to want to see more in the future. But I think all this really does depend on how Bitcoin is perceived moving forward and performs in the short term. So we have a projection of HUT8 out until 2027. I'll quickly explain my assumptions here to give you guys a better idea of my thought process going on here. Bitcoin averaged 45.3K in Q1, and as of Q2, it averages slightly above that at the moment, but we'll cut that down to 42.3K to keep our projections in line with this next month as things just aren't doing so hot lately. These next 2 quarters for 2021 are probably going to be the most unpredictable, so I'm just going to say it averages 39 and 40K. For the rest of this model, I'm going to assume that Bitcoin and HUT8's hash rates grow steadily along with Bitcoin. And so expenses here, costs of goods sold, is going to follow in the way of revenue. As these miners grow and scale on miners, the costs should trend similarly. G&A is going to be somewhat similar as well. Depreciation here, I have it spiking from the recent purchases and then increasing steadily as the company reinvests. And down here, we have interest on investment income. I adjusted this for the Bitcoin staked at 4% from Genesis and Galaxy Digital Holdings. And everything else here, you guys can just pause and take a read if you'd like. There's nothing too crazy going on though. So on to the good stuff, guys. Probably what we all came here to see. And it is fun getting to see these numbers myself. And so I've highlighted in light blue the rows that we should focus on. So in 2021, it looks like HUT should be intrinsically priced at these levels here, ranging from $3.44 to $5.73. But as investors, we always look forward, and their share price and share price targets will be on this line. In 2022 here, we see a range of $5.88 to $9.80. Now with the volatility of Bitcoin, the range we're going to see these miners being traded at will more than likely follow the trend of Bitcoin optimism. And so throughout the years, you can see the stock making the moves up to 20, 30s, 40s. And so you can see the growth and potential of HUT8. So I'm going to be changing things up here and there just to see what works for everyone. And by the way, if there's a stock that you would like me to cover, just shoot a message down below and I'll see what I can do. And that's it for this one, guys. Thank you for listening.